Mike and Arif. And Mike, this week, let's continue to explore the differences in the impact locally versus regionally versus province-wide and nationally of COVID, the economy, predictions in the real estate market. The topics and the opportunities to discuss this are endless.
Yes.
Mike, one of the things that I wanted to talk about, though, is just this week, just in the last couple of days, it was announced that the province in certain regions, certainly in Toronto Peel, are going back into a more restricted form of transacting business, stage 2. And then right on the heels of that, there's another article that came out that said, we predict in 2021, we're going to see a 7% decrease or decline in the housing prices on average. And Mike, I'm concerned by that because certainly locally here in Barrie and Simcoe County, many of our audience or many of our residents receive their news from more mainstream stations or mainstream outlets, and they're really broadcasting a much more regional or macro news feed.
Yeah, well, they're Toronto centric. If they're out of Toronto, nothing happens beyond Toronto. So any of the influences and impacts they're experiencing or predicting are likely Toronto based. It's rare that you'll see a story about Barrie or Simcoe County real estate, current or future, in the Toronto Star or the Globe and Mail. Something significant has to happen. And unfortunately, it's usually something negative before we make the news up here. And I'm totally fine with that, but it's one of the things we have to temper when we're getting our news that, and one of the things for our area that is significant is we're on the edge of the greater Golden Horseshoe. Losing my earpiece. Can you still hear me? I'll go with one. The greater Golden Horseshoe is upwards of 7 million people. It's right next door. When you're talking about our real estate markets, we're greatly influenced by that and what happens there. You go across Canada, so many other municipalities, they don't have that elephant next door. So let's get into that and the details of how that
absolutely
changes.
Well, two things, Mike. First and foremost, I'd say you should put that earpiece back in because otherwise people are going to think we're sharing an earpiece or a set of earpieces. But
it might be. I'm going to have to duck down to grab it.
But all right, well, there you go. But only on Rogers
technology.
TV, Barrie. But secondly, actually, a shameless plug for our show. And if our audience and people in our viewer geographic viewing area want to get more accurate and up-to-date information, really this is a good source. And watching a local community program where we have the opportunity to discuss what it is that we're actually being pushed in terms of in the media, we can actually help to break that down. And that's really what I'd like to do.
Well, we're boots on the ground locally, and we're both entrenched in our respective industries, real estate and mortgage financing, if I can plug us a little bit more there. So who better to get your information from than someone who's getting that information in real time and locally. So
absolutely. So let's just actually do exactly what you talked about and break some of that down. So if you look at the lion's share of the population, and as you mentioned, many of the news outlets or many of those who are making these predictions are living in Toronto and the GTA. And I remember a former premier referring to Barrie as Northern Ontario not so long ago. And the fact of the matter is, though, that if you look at that sort of a province of about 12 million people and 7 million people live within sort of a very tight radius of downtown Toronto within the hour, let's put it that way, it's hard not to assume that that's what's going to be sort of biasing the news cycle or the information. But I think what's critical and what's really important is that for those of us who are living within earshot of that broadcast, we may think erroneously that that's what is going to happen here in our area, and that's simply not the fact. And let's discuss why. It is possible that if you've got 7 million people, or even if it's 3.5 million people in Toronto proper, who are finding out that they no longer have to live and within commuting distance or walking distance or a short drive to work, and they can move out of the area.
Yeah.
And even if it's a small percentage of the population that's going to do that, let's say it's 1% of the population that's going to do that, okay, you've still got a huge number of people who are looking to outlying regions for their next home. And
Yep.
so what does that do? It creates availability of inventory. So new home sales may slow down. So those who are building those massive condos or subdivisions in the GTA, that may slow down. But also the resale market may slow down. And all those people, let's say a small percentage of those people move to Barrie and surrounding area.
Mm-hmm.
Well, we've only got so much capacity here. We've only got so many new homes that have been approved, and that approval cycle can take 1, 2, 5, 10 years. So we've only got a small amount of new inventory coming on stream. I liken it, Mike, and I realize I'm preaching a little bit here, but one of the things that came to mind when I was thinking about the show is I think of it as an auction, right? And if you've got one item that is rare and in demand, highly sought after, and there's a bunch of people going for it, what happens in that auction cycle? People continue to bid and bid and bid higher. Suddenly, if you find out that there's multiples of those available, what happens to the value of that auction or that bid? And that's how I started thinking about the homes that are becoming available for sale here. And that 7% decrease down in Toronto. But if even a percentage of those people are moving up to Barrie, what's going to happen in that bidding cycle in that auction?
Yeah. Well, it's a good analogy, and it's an accurate one, because that's precisely what is happening in a busier market. You will get, within our office, someone had posted on our chat board for our office that they had 48 offers on a home last week. 48 offers on a home is definitely going to drive the sale price of that home up. And that's unhealthy. I don't like to see that. I like a more stable market, but it's the one we have, and it's the one we're dealing with. It is going to get a little quieter as we go into the winter. I think for the remainder of 2020, there's still a lot of people catching up to the time we lost at the onset of COVID into the spring and early summer. So we're still playing that catch-up game with those people who are still trying to purchase a home, still trying to, fulfill their real estate plans that they had for the year. But as we move into next year, into 2021, I think, again, given our unique position next to that big elephant of 7 million people, many of them, their priorities are shifting for the reasons you stated. There's health concerns. People want to be a little bit more spread out. There's economic concerns. The price of a home in the GTA is so high. Comparatively, we're still viewed as affordable. And then the other big and new element of that is technology, even though it's been there for some time, where suddenly there's just an awareness that we can work remotely and do our jobs that we otherwise would have to do downtown Toronto.
So Mike,
ironically,
we got to go to break, but I want you to pick up on this, and I want to keep talking about this. I also want to talk about your thoughts on the hybrid home, and I want to talk about some impacts of what changes we might see coming ahead from the government. So hold that thought, Mike. Make any mental notes that you got to. We got to go to break real quick, and when we come back, let's pick up the conversation.
And hybrid homes when we come back after the break.
Hybrid homes. Stay with us. I'm hitting home with Mike and Arif. to hitting home with Mike and Arif, and no, we are not sharing earbuds on this show. But Mike, you know what? Before we went to break, you went on to some great comments. I want to actually bring you back to the thought, though. Here's my concern, because you said something that was really interesting to me. One, the professionals, the experts are predicting a 7% decrease in home sale prices in they're saying on
GTA.
average. Yeah, we're clarifying that. We don't believe that's going to happen here. That should be viewed as the GTA only, in my opinion.
Yeah.
I believe in yours. And then you talked about, as a realtor, by the way, you talked about a concern that a realtor was seeing 48 offers on a home. Here's my thing, Mike, and I want you to clarify this for me. If they're predicting a decline of 7% in the GTA, I predict absolutely either constant home prices or an increase, because based on that auction analogy, I think we're going to see pressure for more people bidding for a very constrained amount of inventory. Maybe you can talk to that.
Well, like as you say, there are different factors that are influencing the behavior and the home preference for GTA people. Price, technology, the ability to work remotely, and then health concerns. That's causing a portion of GTA residents to look elsewhere. And I think that is going to continue. Now, will it continue at the same pace it has this year? I think we took a full year's fairly active market and we crammed it into the later half of 2020. And that's what's given us an atmosphere where we'll see, 40 plus offers on one home. That won't continue. But I don't expect prices are going to drop in Barrie Simcoe County region. They're going to level off. And why I think that's a good and healthy thing versus having 48 offers on your home, that's good for you as the seller in the moment if you're getting 48 offers, because you're going to sell your home for over list in all likelihood. However, you have to then turn around and buy a home, and it's possible your kids or your friends' kids and their grandkids, they are going to be coming into the market to buy a home. And if home prices are driven up too high, we're already there where the entry level, the bar is set so high to get into a home. If we keep moving that bar higher and higher, it creates all kinds of social issues for people. And the other part of that as well is if our prices continue to go too high, we're going to pass a point where we're not as attractive to that GTA area as the place to drive to buy an affordable home. And once our house,
Mike, I'm going to challenge you on that thought, though. I'm going to challenge you on that thought, because while our friends and neighbors here locally may care about that, and trust me, I care about that, and I think we all will. Where is that tipping point between those who might be leaving the GTA for safe harbor here in our area and areas like ours?
Yeah,
they don't care. And I don't say that I don't say that in malice. I say that they're going towards utopia. They're going towards the better land, the promised land that we are. And I think there'll be a tipping point, but I think the pricing will be out of range for many, if it already isn't, long before those in the GTA realize the law of diminishing returns, or whatever you want to call that. But let's talk about this though for a second.
But I'm going to cut you off there because there's another influencing factor there too. Okay. As your home values increase, whatever market you're in, so too do your taxes increase proportionally. And high taxes are probably one of the number one reasons. If you did a poll of people who have left Barrie for places north, east, or west of here, and what their top three reasons were, you can bet taxes, high Barrie taxes, entered into that. So raise our average home price another $100,000, $200,000 over the next 5 years. And those taxes increase too. It's going to drive a lot of people out of Barrie, and that's not good for us.
So I think you're right, and I think we will have to see our local government continue to monitor what is the volume of migration and how does that impact, what does it cost to operate a municipality such as ours in outlying areas. I think you're going to see pressure on those municipalities to either fast track or look at ways of moving new home development and new construction along at a more efficient rate. And I think we would potentially see, as we get more density, a slowing of the escalation of property taxes. Now,
Yeah,
that being said, we talked about something called hybrid, Mike, and you
yes.
talked about that, and I found that interesting. Hybrid homes, and what does that mean? I thought of it as homeowners ditching the sort of the luxury sedan and the utilitarian pickup truck for a much more luxury pickup truck or SUV. How does
Serves
that
both
fit?
purposes. Yeah. Well,
Yeah,
in
how does that fit for
housing,
you?
where I see hybrid, I mean, it's not a definite dictionary defined term with regards to real estate, but if I had to define it, I would say there's any number of definitions, and one being, yes, combining your primary Monday to Friday residence with the advantages of your weekend, 1 week in the summer cottage that you may have. So you're going to buy a home that serves both as your home, and if not your cottage, your launch pad for your cottage, because you're close to cottage country to go do your golfing, boating, whatever. So we'll see the two of those things merge. The other hybrid that I see as well is the hybrid merging of different generations of family for economic reasons and health and safety reasons, I think, going forward too. Moving mom and dad into the seniors residence is a little bit it's scary for some, and for mom and dad as well. They may not be looking at those seniors residents through the same lenses for the short term, at least while we're getting through this COVID. So we're going to see multi-generational residents, and that's adults with their adult parents, also adults with their young adult children who are still at home because moving into a new home, they're just not quite there yet financially to move into a home. So we're going to see these hybrids environments. The other hybrid is creating an income source from your home. You may not be able to carry that $600,000 home all on your own, but if you can put that second suite in the basement and pull half or more of your cost for carrying that home by providing an apartment for somebody, that's another hybrid thing that's becoming
Mike,
more and more popular.
I got to tell you, you've given us a great tangent into our next section. We got to go to break, but when we come back, I'm going to use a 4-letter word. So stay with us on Hitting Home with Mike and Arif on Rogers TV Barrie. Welcome back to Hitting Home with Mike and Arif on Rogers TV Barrie. And Mike, before we went to break, I promised you, I said I was going to do it because I am hot under the collar. I told you I was going to use a 4-letter word. And one of the items that's made the headlines in the last couple of weeks, certainly, especially as we've been seeing the opposition trying to challenge the government's the confidence in the government, and that is around the topic of the home equity tax. And I think we really need to address that here. I think we'd be remiss in not discussing what impact that may or may not be having on the market right now, Mike. And just for those of us who may or may not be up on what this is about, and I'm not going to go into a huge amount about it, but for generations, for as long as certainly I've been around, the one safe haven that Canadians have enjoyed and those of us who are homeowners, who have aspired towards home ownership, is in knowing that as we build equity in our home, as we pay down our mortgages, as we see migration impact the value of homes and sort of demand increase the value of homes, we knew that towards retirement, we might be able to sell our home and use that nest egg that we built up towards funding our retirement.
We plan for that.
That's been an important element. You're right. We have planned for that. It's been part of our plan. GICs don't really do much. RRSPs, RESPs, tax-free savings account, all these different tools that we've had available to us to fund a retirement because
which some have had available, not all. I work in real estate.
Well, and I was just going to say,
yeah.
For many of us, long gone are the days of working for the corporation for 30 years and having a pension and retiring comfortably. So what alternative means and mechanisms have Canadians had? They have attempted to do that through what was completely legal and on-site and encouraged, which was home ownership. And home ownership has also allowed some of us to be able to draw on that equity to help pay for our kids to go to post-secondary institutions or whatever it may be. And that is on the chopping block.
Yeah,
that's not what I want to debate right now. What I want to suggest is we may also see an exodus. We may also see movement in the market of people leaving the GTA and cashing in on their homes that may be worth $1.5 towards $2 million on average to take that equity while it's still untouched by the government.
Yeah, another influencing factor for sure. Yeah, that's another influencing factor there on top of the ones we talked of in the first and second segments.
If I had to look at either 20 to 50% tax somewhere maybe on that capital gains, because it is referred to as capital gains. If I'm looking at that looming in my near horizon, that may be the thing that pushes me to move right now.
Do it now. And any financial advisor is going to tell you to do it for that reason and that reason alone. But add to that the fact that, as we've talked about in the past, interest rates are at lifetime lows right now. You can't borrow money any cheaper. They're almost giving it away at 2% and less interest rate for on a mortgage. Why, with those two combined things, you wouldn't be taking advantage? And again, moving to a region where homes are, 40 to 60% lower in price than the region you're living in right now, being the GTA. All of those things combined. The question then becomes, why not? Why am I staying here?
Yeah, absolutely. Well, what's keeping me here? Absolutely. And the answer is not much. I like commuting into when there were restaurants open downtown Toronto, and I feel for those folks. I loved going down into Toronto for a night or to go see a game or to go see a show or whatever it might be. I did enjoy that every once in a while. But Mike, there is one area where we agree. Sometimes we agree, sometimes we don't. But certainly this is an area that we agree, and maybe you could speak to it. And that is, please, before you list, not before you buy, because if you're thinking that you're going to buy, great. But before you even list, and you may sell at a massive premium compared to what you might have years ago, or this may be definitely something you're considering. Before you list, you need to know you've got to move somewhere. You need to know you've got to buy.
Yeah.
And Mike, your guidance to people is?
Well, you know what? Given the market we're in, you call me up on the phone on a Sunday night and say, I want to sell my house. We do the paperwork. We get the sign on the lawn Monday or Tuesday. Be prepared that home may sell within 24 to 48 hours. Now,
what does that mean?
I've seen this scenario happen where people go, well, I've been in my house 5-10 years. I've got equity. Now they've got a firm offer on their house. Well, we better get to work on finding that new house. They find the new house, they go to their lender, and then the lender says, you know what, things have changed with your financing. We're not going to qualify you for this mortgage, or at least not at that amount. You got to come up with a bigger down payment. Something throws a monkey wrench into it, and they're unable to close on the next home purchase. They didn't go and do this before they listed because they figured, well, I've been carrying a mortgage now for 5-10 years. I'm golden. I have no problem.
What could be wrong?
Lending rules have tightened up with the stress test in there. The factors, the formulas that they're using to qualify people have changed, and that's your department. You know that better than anyone. So the bar's a lot higher, even for those who are current homeowners. So don't take for granted that just because you're in a home right now for sale that you own and you qualify for the mortgage on, that automatically is going to transfer over to the next home you buy.
So that's a great,
prepare yourself, get out there, see Arif, see your lender, and find out where you stand before. And even as a buyer buying for the first time without selling, that's obviously good advice. You want to know how much you qualify for. You don't want to fall in love with that home that's above your price point for in affordability. You want to be shopping within your range, and you want to know that you're going to be able to close on that.
So that's great advice, though, Mike. I mean, in a nutshell, if you're selling high and you're buying today at the same time, you're probably buying high. However, you may be thinking to yourself, no, actually, I'm going to offset that. I'm not going to buy high because I'm not buying in the same neighborhood.
Right.
I'm actually going to be moving out to the country. I'm going to move somewhere more rural where the prices are lower. That's great. You might be then putting some money in your pocket. But now that the housing type is different and you're not leaving a subdivision and going into a subdivision, all the reasons that Mike talked about, qualification, your credit, did you accept CERB? Did you need CERB? Did you do a deferral on your mortgage? Did you do a deferral on any of your credit card payments? Those are going to be massive things to consider if you're going to qualify. Mike, I got to wrap this up because we got to go.
And however, just add on that. Just add on that, there's far more than what you even mentioned there to consider, and all the more reason to sit down with that lender and go down that checklist.
Absolutely. We'll have to do that. Definitely call your mortgage professional. But the other thing is, if you're switching housing types and going rural, for many lenders, they don't lend the same amount or the same type of product on a home that is rural, that is one is in the subdivision. I got to wrap it up, Mike. We're out of time. This was a great show. Thank you very much for watching Hitting Home with Mike and Arif. We'll see you again.